Yo guys, welcome back to my channel. So for today's video, right, is an update for my previous video that I did for the RCR market back in May. A lot has happened since then and it's about 6 months already. And in today's video, I'll be covering mainly on the RCR market, and this will be covering on the new launch supply that's coming up in 2026 and also how it will impact the RCR resale market. For those of you that are owners or even the buyers that are looking in the RCR region, I'm very sure this will be a very useful video for you. So stay tuned to the end to find out more. For those of you that's not familiar with the RCR region, over here you can see this is a map of Singapore, and here the ones highlighted in the green color, District 3, 4, 7, 8, 12, 13, 14 and 15, those are considered the RCR region. Then of course you have the blue color ones, which is the outside central region, and last but not least you have the yellow color one, which is the core central region. So today's video will be focusing on those districts highlighted in the green color one. To start things off, I'm going to be giving you guys some RCR market updates starting from the new launch site, okay? So here you can see actually for 2025 RCR launches, I'm going to collate all the way back to the start of this year. You can see starting off we have Penrith achieving 97% sales on launch day, average of 2008 PSF. The Ori 86% sold on the launch day, averaging about 2007 PSF. This was in January this year. Okay, CapitaLand 94% of Lindenwood's 2450 PSF average. Kingsford One Marina Gardens 38% sold at launch. I think today already moved quite a lot more, and the average was at 2953 PSF. We have Zion Grand, also RCR area, 84% at launch, averaging about 3050 PSF. This was a very strong price done for the RCR region. And All Green sells 54% of Promenade Peak, also averaging about 3003 PSF range. This one also ever since the launch day in August, right now already quite a few units have moved as well. And then last but not least, we have Bloomsbury Residences that sold 25% at launch. I think this one already doing quite well in the post-launch market. But at that time in April, I think they were hit with the tariff trade wars. Same with One Marina Gardens as well, okay? And this one for Bloomsbury averaged about 2474 PSF at launch. And these are all harmonized projects other than Lindenwoods. So one of the more recent news is also this Dorset plot, GLS at the RCR region. So this was bidded by UOL, Singapore Land Group, Keng Leong, and this was quite surprising because there were 8 other developers bidding for this plot. So I would say overall, the developers have a lot of confidence in this area. And I would say, right, Farrer Park, it's not the usual like Toa Payoh, Queenstown kind of district, but the developers already bidded so much higher for this Dorset plot, because I think they already forecasted what is the market direction for the next 2 to 3 quarters. So I'm quite sure developers, they have already their own data and analysis that they're done. So here, right, if you're looking at 1003 plus PSF PPR for the land, they should be easily launching at 2007, 2008 range next year. So with all the past launches in the RCR region for 2025, and also we have seen the land bidded for 2026, right? Now let's take a closer look, right, on what are more of the confirmed sites in the RCR launch for next year, so that you can have a better understanding of what's coming up. I think this is very important because I've been already sharing with these my clients in the RCR region, right? There's going to be quite an interesting play here because the supply is going to be very limited. Okay, so here, right, you can see just now I already say this is the Dorset plot. So the break-even price estimated should be 2460 PSF PPR already. Then launch price, I'm expecting about 2700 onwards. Okay, next up we have, this is going to be also a very hot plot. This is Thomson View. Okay, this is the Thomson View M block. Based on the break-even, this is at 2058 PSF PPR, but we definitely know that the developers, they won't be launching at this price range. So I think it's going to be quite interesting. Let's take a look, right, at what is the nearby resale selling at. Okay, so you can see here based on the map, Jadescape is going to be the nearest and most relevant data point that I'm going to be taking from when you compare to Thomson View. So this one kind of gives you a good gauge as to how the developers will potentially price Thomson View. Okay, So over here, I also have the Jadescape recent transactions. Then you can see I'm just using 3-bedder as a gauge because I think that is the most popular bedroom type lah, okay? And for Jadescape, the characteristics of this development, it is near Marymount MRT. It's a mega development with 1206 units. It has a very big plot of land, 400,000 square feet of land, and it is within 1 km of Catholic High. Okay, so you can see here for the recent transactions in October and September, we already crossed $2,500 per square feet, and this one ranged from 6th floor all the way to 18th floor. And I think this PSF shows a lot of confidence, especially in this area. And do bear in mind, Jadescape is going to be older when Thomsonville going to hit the TOP mark. Yeah, so this one you have to factor in all this lease decay in the age. Then you can accurately gauge how much is the developer going to price Thomsonville at. For Thomsonville 2026 launch, UOL, Singland and CapitaLand completed the en bloc for Thomsonville at 810 million. So just now, like I mentioned, the break-even price was 2,000 plus PSF PPR, and the residents here get back 2.2 million to 4.9 million each, depending on the size of their unit. So definitely there's going to be quite a bit of liquidity from these en bloc owners that can go back into the market, be it in the resale market or be it the new launch market. And just to give you some context on this plot, right, this is near Upper Thomson MRT. It is also a mega development. For the number of units, we estimate it's about 1,002 plus or so. We don't have the exact one yet. And this is on a 500 plus thousand square feet of land. And this is also near Thomson Plaza. And this is 1 km to Ai Tong Primary School. So for those of you that's looking at this school, definitely you will know that this is one of the top, most hotly contested primary school in Singapore, and definitely will be oversubscribed. And this launch should be aiming to TOP by 2030. From what I see, right, UOL, CapitaLand, Singland, they will have a very strong monopoly in the RCR new launch prices next year, because other than the Thomsonville plot, they also has the Dorset plot. So these two are by the same developers. Do bear in mind they have a pricing monopoly here. Okay, and with a bigger plot at Thomsonville versus Jadescape, right, and also a so-called better school, more hot school, newer project, and also nearer to a shopping mall, how much do you think the developers can price Thomsonville at? And this will be a 7-year age gap to Jadescape. Okay, so that's why I estimate for this is my own estimate, should be around 2008 PSF range onwards. And do bear in mind that this is a non-harmonized plot because this is en bloc lah. Yeah, but if you adjust for harmonization, I won't be surprised if this can even hit $3,000 plus starting from. With the monopoly in pricing and the limited launches next year in the RCR region, we have to keep a lookout for the prices that UOL potentially will price Thomsonville at. Okay, so for the last and final plot that is bidded for next year's launch, this should be the last one already, Media Circle Parcel A. Okay, so this one also very near the current plot, which is Bloomsbury area. And I estimate this one should be around 2004 PSF range. Okay, the break even is 2052. You can see this is already all the plots in the RCR region. So I know for some of you, maybe you are more flexible in terms of area, you don't mind if it's OCR region, but I know there is a couple of you that is very diehard, like you don't want OCR one, you really only want RCR. Unfortunately for you as a buyer, next year we only have 3 RCR GLS plots awarded. Okay, and I think this one really, we will start to see the shift in the momentum for the RCR new launches and in the resale market also. So to further add on, we still have a RCR plot that is open for tender. This is at the Telok Blangah Road area. So the tender will only close on 4th of November. This one I'll be quite curious to see whether it will be as aggressive as the Dorset Road plot. I won't be surprised if you even have more than 5 bidders. I think it's quite reasonable because nowadays the developers, the land bank is quite low already, and you can see the take-up rate for all the launches has been very strong. So I won't be surprised the developers are going to be more aggressive to acquire more land. This one, even though it's going to be closed for tender on the 4th of November this year, I'm quite sure this will be spilling into the 2027 supply. Okay, so now we've already discussed what has happened in the RCR new launch so far in 2025 and also what's potentially coming up in 2026 in the RCR market. let's take a closer look in the numbers, right? So now, starting off, I'm going to be looking at the new launch RCR supply numbers first. For the entire Singapore region in the new launch supply, we have is 4697 units in total. And next up, we have the OCR region about 1100 units, RCR region 2003 units, and CCR region about 1100 units. So what was surprising, I think back then in the May video that I mentioned, I was looking at the CCR region and I wasn't sure at the demand and the take-up rate by the local Singaporeans, because with the ABSD all that, I'm sure there will be very little people buying, especially if you're a foreigner. So majority of the market and the demand should come from the locals and also the PR. And as we can see here, 1100 units supply left in the CCR region. Definitely the past few launches never really increased the remaining stock because the take-up rate has been very strong. Okay, so but now just pay attention to the RCR region. For now, we have about 2300 plus units as of October. So using the reference point which I did in the May video earlier this year, you can see back in 17th May 2025, we have a total of 25 launches still in the market and about 2300 units available. But as of today, October 31st, we have 32 projects, which is 7 more projects, but we still have about 2300 units left in terms of inventory. So you can see in terms of the number of launches, we have increased by 7 new projects, but there's almost no increment, right, in the supply. This represents even with the new supply coming in, the demand has been able to absorb it at a very strong rate, because by right now, if the demand not so strong, maybe it's about 50% so all this, the units shouldn't be the same as before. But as of right now, whatever that's coming in the new launch market, as you can see, Zion Grand take-up rate, Penrith take-up rate is almost close to 80+%, 90% sold on day one. So actually very strong demand, and the supply cannot keep up. Whatever the supply that is new that's coming in, that's quite a decent project, it will still be snapped up very fast. So right now, I'd like to do a projection, right, of what's to come in 2026. And then you can see over here, we have the 3 plots that's confirmed for launch next year. Dorset Road, they want about 400 plus units. Thomson View, about 1200 units. Media Circle Parcel A, about 300 plus units. If we add on to what we have right now at 31st October, 2300 units in the RCR market, this totals up, right, to be about 4300 plus with the supply next year. And we still got 2 more months to go for this year in the RCR market. Don't be surprised if next year we starting off, we have even lesser than 4300 plus units. Okay, so right now we've already done the projection for the RCR New Launch Supply in 2026, right? The total amount. What does this number actually represent? Okay, so right now I've compiled, right, the past 3 years in terms of the RCR take-up rate in the new launch market. So on average, right, you can see the bars represent the volume, which is the number of units sold. On average, across these past 4 years, we are looking at an average of 2,900 units in the RCR market being sold each year. So you can see the numbers here. Total next year is going to be 4,300 plus units. And if we minus off this average, judging by the 4-year trends, we are looking at a take-up rate of maybe 2,900 units per year. So this will leave the supply by the end of 2026 to be 1,463 remaining inventory. So you can see, right, today, just now I already showed you, we have 2,300 plus units remaining in the RCR new launch market. Can you imagine next year, at the end of 2026, there's going to be new RCR plots that's bidded, all that, but the remaining stock available is only left with 1,004, which is 900 lower than our current supply this year. What is going to happen next? What is the impact next? Okay, so this one maybe you can leave in the comment section before I talk about it in the next part. What do you think is going to happen to the RCR new launch and also resale prices when we see the supply for the new launch to be left about 1,004 units at the end of 2026. Now, on top of the new launch demand, I'm also going to be discussing about the RCR resale demand. So over here, the blue color bar represents the volume for the RCR new launches, and then the red color bar represents the demand and volume for the RCR resale market. On average, for the resale, we have about 3,800 plus units being transacted per year. This results in the RCR buyers per year is about 6,700 plus. And you see here, we have RCR buyers 6,700. What will happen to the new launch buyers in the RCR region? Here, I already mentioned just now, we're going to be looking at 900 units lower in the remaining inventory for the end of 2026 compared to 2025. What will happen to these people is that the RCR market, right, will have to absorb the rest, because in the end, I know got some buyers, they only can accept in the RCR region, and I've served quite a few clients, they really don't want to accept the OCR region. Completely understand it's not going to be that convenient now, okay? When certain people, they cannot accept the OCR region, the resale market will have to absorb the rest of the buyers. And if certain buyers are priced out of the RCR new launch market, right, then they will still turn to the more expensive resale properties. And if you have seen in my most recent videos, I did discuss like the RCR 3-bedroom types, how much are they selling at. If you see just now, earlier part of this video, you can see Jetscape already TOP 2023, but the transactions already hit $2,500 per square feet. And these are not cheap prices, and if you adjust for harmonization, we should be looking at 2,700 PSF range already. At today's prices at this let's say higher supply inventory market, right, already got 2,005 that is non-harmonized and $2,700 that is harmonized transacted in the resale market. Can you imagine what will happen next year when you are faced with a drop in the new launch supply in the RCR market? And on top of that, right, like I mentioned just now, UOL, they're gonna be owning 2 of the more popular plots in the RCR region next year. Do you think the developers will actually price these RCR launches cheap? And if you look at my chart, right, you can see for the resale prices compared to the new launch prices in the RCR region, we all along have maintained the gap about 40% to 42%. So it's around there one. So typically, right, the new price benchmark, I think, will come from the new launch developers. They are going to be launching quite high, and then the resale market, like let's say Jetscape, all these in the RCR region, they will maintain this 40% gap. Just like I mentioned, if the developers are minimally going to launch at $2,700, $2,800 per square feet, let's say Thomson View, then the high floors probably will hit 3,000 plus, 3,001 PSF. And if you adjust for harmonization, this will look like 3,000 starting from, and then even hit 3,300 plus in the RCR market. As of right now, it might seem the numbers is quite crazy, but I won't be surprised, because next year there's really nothing much to buy in the RCR market unless you can look for potentially good deals in the RCR market right now, which I've been sharing with some of my clients. So for those of you that is still looking for bargain deals in the RCR market, before this new price point is out, right, I think there's still some good deal at the old price point in the RCR market right now. So you can WhatsApp me at 84849302. I'll be more than happy to share with you guys. Because next year, I think it will eclipse whatever prices we see this year in 2025. And of course, this is just based off the overall market trend in the RCR market. The different bedroom types will have different trends and also different supply and demand. So I can also collate those, maybe the 2-bedder specifically if you're looking for two-bedder, or even the 4-bedder types if you're just purely looking at the 4-bedder in the RCR region. You can reach out to me. I will be able to dissect and go deeper into the numbers for each area and each bedroom type. Looking forward to hear from you guys. After we discuss all the numbers, upcoming supply for next year, let's take a closer look on the URA website to see what is the upcoming land bids that's available. Okay, so here the ones I've circled. Telok Blangah Road will be closing in this month of November, followed by Dover Road. So Dover Road will be near One North MRT area. This one will be open for tender November 2025. And Tanjong Rhu Road will be near Tanjong Rhu MRT. This one also will be open for tender November 2025. Last but not least, we have Kallang Avenue, which is near Kallang MRT. This one will be open for tender in December 2025. So all these still open for tender or going to open for tender end of this year one, right? Very likely they will be supply for 2027 already, because usually for land bids, once they conclude, right, they'll take about 1 year, 3 months to 1 year, 6 months to actually launch in the new launch market. So this essentially should form the 2027 supply already. And now for the reserve sites, right, you can see there's a couple of them, but I won't go through all of this because these are still not confirmed yet. These are under the reserve site. So you see, right, when I discuss all this with my clients using the confirmed sites and also the reserve sites, right, potentially, is there any opportunities in the resale market or the new launch market that's nearby all these plots? Because if we see next year in the RCR market, we already know that very likely the resale market is going to be going up because there's going to be very limited RCR new launches, and also there's going to be a pricing monopoly by CapitaLand, Singland, all this, and UOL. Here we have to be forward looking and then see like if there's any opportunities, especially for investors to capitalize in the RCR region. Because when I see all this, it's very clear already. The RCR resale market is gonna have a very big catalyst move next year. This year you still don't feel it yet because I think a lot of the buyers entered the new launch market recently. Maybe some will spill over to the resale market in the RCR region, but the full effect, I feel like you only see the FOMO happening next year. So for those of you that don't really want to get priced out next year, you can feel free to reach out to me because I do spot some good deals nearby some of these plots. So you can reach out to me at 8484-9302. One of the reasons why I always like to study all these upcoming plots or upcoming supply, right? Because over here you can see in the Queenstown area, I'm using a resale case study at Stirling Residences so that you can visualize what's going on, right? And this is in relation to Penrith also. Okay, so right now let's go back in time to 2024 when Guaco Land and Hong Leong actually submitted the top bid for this Margaret Drive GLS. Okay, so this was bidded at 1154 PSF PPR back at 1st August 2024. So this is almost more than a year ago already. And today, fast forward to October 2025, we have achieved 97% sales at over $2,800 per square feet at Penrith. So you can see, right, there is this time gap that some of my clients, I told them you can actually capitalize on this time gap before the buyers actually realize this in the new launch market for the new benchmark. Because more or less when you have the land bid price already out, right, after you factor in all the construction costs, marketing costs, the break-even price is more or less fixed one because these are the developer cost. So after you factor in the profit margin, all this, then that's where you kind of can gauge the lower starting from prices all the way to the higher range. And from here, we will try to identify in the resale market if there's any opportunities. Over here, I have the transactions at Stirling Residences. I'm just taking an example, okay? Here, this is what I call the GLS effect, right? Which Margaret Drive, this GLS, or as we know, Penrith has done for Stirling Residences. So I would like to bring you back to July 2024. So this was before the tender has been awarded at the Penrith site. But if you see just now, right, we already have the schedule for confirmed sites. So more or less, these buyers, when they came in July 2024, they already know that this Margaret Drive GLS was going to be bidded at. Of course, we don't know how much it's going to be bidded at, but if you can kind of observe the RCR land bid trends, right, then you can kind of forecast how much the developers potentially can be bidding for. But if you don't know how to do all this, you can reach out to me because for me, I've been studying a lot on all these developer trends and how much potentially they can be pricing their land bids for. And also, I study real estate major at NUS. For me, I kind of work closely with the developers and I kind of know their pricing strategy for the lands. So here, right, I'd like to bring your attention to this transaction, unit number 29-25. So this is a 1055 square feet unit, 2398 PSF. And then you can see in April 2025, this 21st floor unit, so this is already 8th floor lower and transacted at 2510 PSF. And last but not least, we have the most recent one, which is September 2025 this year, 17th floor at 2561 PSF. So these are all on stack 25, exactly the same layout, 1055 square feet unit type. And then you can see for the 14th April 2025 transaction, right, this will be considered post-tender announcement already. So you can see just from the post-tender announcement to the pre-tender announcement, right, in a short, like I would say 7 months, 8 months period, this owner at 29th floor already had more than $100 PSF gain just based off the announcement. Okay, and then when you compare to the 17th floor unit that was transacted at September this year, Penrith launch announcement, right, then you can see the gains was even more because it was a 17th floor unit. So just to bring you like floor by floor, so we compare each one of these transactions to the 17th floor unit first. Okay, so the April transaction we compare to September, right, we have a 5-month gap. Okay, and you can see in the numbers it is 4 floors higher, 5 months earlier, and 51 PSF cheaper. So it's quite crazy. Like the higher floor unit, right, already managed to transact at a 51 PSF lower than the unit above, than the lower unit. Yeah, so this one already locked in 53,000 in terms of profits minimally, and I haven't even account for the 4 floor difference. Okay, so this is the post-tender announcement versus Penrith launch. And if you go back in time all the way to July 2024, you compare, right, this is 12 floor difference to the 17th floor unit sold this year, and you can see 14 months earlier 163 PSF cheaper, and this actually resulted in this 29th floor owner capitalizing on 171,000 profits minimally, and we haven't even account for 12 floor difference. So what this means is that let's say we count like 10k per floor jump, right, this owner that bought last year July 2024 already gained about 290k in the resale market in 14 months. To me, this is very scary because it also shows the strength in the resale market. But at the same time, right, I won't rule out that resale market will make money. Okay, so I think this is a particular for this Queenstown area because we all know that for the 3-bedder good layouts, it's going to be quite tight in terms of supply. But you see, right, this person that bought in July 2024, they bought it at the pre-tender announcement stage. So for those of you that is wanting to look for good deals in the resale market, this is why I think it's very important to analyze what is coming up in the post-tender announcement and also in the pre-tender announcement. But of course, you need to see what is the demand supply in this area, and you need to accurately kind of suss out what is the developer's bidding price on the land for lah. Yeah, because if you make a wrong pre-tender announcement bid, right, for the resale market, then maybe you won't end up at such a strong profits, but you can still be ending up with decent profits lah. Okay, so I'd say this is generally what I call the GLS effect, in particular for Queenstown itself. Together with all this analysis for the upcoming plots, the demand supply for the resale market, and then we can kind of forecast what's coming up in the new launch market, what's the developer going to be pricing at, then this will kind of form what is a good entry price to determine at that point of time in the resale market. And I think this is going to be quite important, especially if you are an investor looking at this region. To me, right, in the end, I've also seen buyers that don't make money in the resale market. So it's very important to know all this beforehand, and very importantly, leverage on potentially all these GLS effects if you are looking to invest in the resale market. On top of all this, studying upcoming new launch supply in the reserve side, what is the supply and demand in the new launch sector. Over here, we also have the KW Compass 10, right, to help us compare and also shortlist units, especially in the resale market. Okay, so I think this will be quite interesting, especially if you are looking in the resale market. So what is this KW Compass 10 about? Okay, so in short, this is also called the Smart Property Scoring Framework. And then you can see, right, so this is an example that I've done for Stirling Residences. I can do the comparison for all the resale properties in the whole Singapore market. You can feel free to reach out to me at 8484-9302 if you want a more detailed comparison for whatever resale property looking at. But over here, I'm just going to use an example as Stirling Residences. So here, you can see we have this pie chart, then you can visualize like what is the strength and what is the weakness for Stirling Residences. So it will be over a couple of metrics that we'll be using to score for Stirling Residence. So first one is investment quantum effect, then second one, future buyer pool effect, location value gap effect, commuter score effect, education driver effect, rental strength effect, amenities and community, transaction volume, depreciation, resilience, development density. So all of these we'll be using AI and also all the data we have for Stirling Residence to come up with this scoring framework, so that at least here, right, once you let's say we take Stirling versus the other resale in Queenstown, we can kind of see oh, Stirling will be stronger in this area versus, let's say, Commonwealth Towers or Queen's Peak. This will be all at a glance, so it's going to be quite easy for clients to understand using this KW Compass 10 framework. To actually look closer on all the different metrics that we use to come up with our scoring table, you can see here, let's say for example, for the investment quantum effect, the main question will be is this the price at a level where many buyers can afford it? So in a sense, we are looking in terms of the transaction volume, what is the median price here in Queenstown, and does it fulfill what are the asking prices or the transacted prices at Stirling Residences? And maybe the second one, future buyer pool effect. Will lots of people want this property when it's time to sell? So this one will look at also the exit strategy in terms of transaction volume, all this. Here we have all in detail how we actually score for Stirling Residences. So for those of you that want to just find out more about using this tool to compare the different resale properties, I think this is going to be very helpful, especially for those of you that maybe you're okay with Queenstown, but you don't know exactly how to select in terms of maybe you prefer exit strategy, you want to price it more on that, then you want to go towards that resale property. But if let's say you want to go towards higher rental strength, then maybe you should go towards this area instead with higher rental yield. So on top of studying all the GLS sites, demand, supply, and also using the KW Compass 10 tool to help us buyers actually identify quickly amongst the resale properties what is a good buy. Here I also have frameworks to identify what has been proven in terms of layout, site plan, and also entry price for each area, which is quite specific because I think for Queenstown, there's going to be Queenstown pricing, but let's say for One North area, it's going to be completely different because I think the pricing, the layouts is going to be slightly different as well. So do you want to be ahead of the curve? Do you want to be the next Stirling Residences resale buyer? You can feel free to reach out to me at WhatsApp 84849302. Looking forward to hear from you guys. And also, if you stayed all the way to the end, I hope you enjoyed my video so far and my in-depth analysis. If you like this kind of content, you can feel free to check out my YouTube channel, and then you can see based on my previous videos how I actually analyze new launch videos and also all the projects in the resale market as well. And if you like my video so far, you can feel free to leave a like and subscribe. Alright, that's it for me today. Looking forward to hear from you guys. Bye!